What is going on, y'all? Let's just jump straight into this per usual. We are looking at Bitcoin, and this is what I would call a chop fest. Bitcoin has been chopping around basically in the same little range here from roughly 62.5 to roughly 57 now for about a week. We had this big move down that happened from the Japanese yen carry trade deleveraging, and we had a recovery here. We were not able to get above the 100-day and 50-day moving averages. We could see that we had a rejection off of those levels, and if you remember, we talked about how this would be a good short potentially, and I would say that that was the case. Didn't move all that much, but it's something if you're a scalp trader. But outside of this rejection here, there hasn't really been a lot going on. This is not exactly favorable conditions for people to be making lots of trades. So what I would like to say, I guess, is, or my perspective on this is the time to really observe and to wait for good signals. I think people tend to get a little antsy, they get impatient waiting for setups, and this can really just create unnecessary losses that can add up over time. So we're in this chop consolidation phase. We were not able to break out of this range when the conditions from a macro perspective, from a seasonally bullish period perspective, which is typically early July, we weren't able to break out. We had some supply overhang issues that was occurring while the S&P 500, for example, was breaking out. So Bitcoin had a lot of wasted opportunities with, in addition to that, with the Trump speech at Bitcoin Nashville. And I think that we're now in this period where the window is not really there to just, go straight back up to the range high and break out, where the market is really going to be very, fairly choppy, and what people call a PVP market, meaning really the market's waiting for, or trading firms are waiting for people to get off sides. Too many shorts to be added in a specific period of time, or too many longs, and they'll usually go after those positions. Outside of that, though, there's really not a lot to talk about other than a potential swing trade here. Let's say that we do find support here, which it looks like we are. We are going into some data this week, and also the Jackson Hole Symposium, so keep that in mind. We'll go into that in a second, but I do see a potential trade here where, let's say we get above this 200-day moving average, you're probably going to retest this level that we got rejected off of last week. Whether or not we break it, who knows? That might have a lot to do with the Jackson Symposium, which is, if you don't know what that is the speech, or it's this symposium meetup that the Fed does annually, and Jerome Powell is going to be speaking quite a bit there. So we could get some good information on Fed policy going forward. They may spend a lot of time to show their forward guidance. But I'm not so sure that it will really matter all that much, because I feel like the market, or we really know how this is going to play out. The Fed is going to start cutting rates in September. I don't know if there's really going to be that big of a surprise, unless he were to come out and if he was really hawkish, then I think that would be surprising. I think people are expecting him to be pretty much neutral to dovish. I'm not sure that it matters, but it's something to be aware of, something that could create volatility. I'm sure you'll see some hedging and probably some price movements going into it. You do have U.S. flash manufacturing PMI, and next week we have PCE. So these are things that could create some good scalping opportunities as we approach those. But in terms of the next few days, so today's Monday, I don't really think you're going to see a whole lot of movement. Yes, you could see people that are getting hedged going into this, and maybe they'll be taken out. You'll have like a short squeeze or something to that level we talked about, roughly 63. I could see that potentially happening, but don't really see this wanting to do a whole lot. So I'm sitting on my hands for the most part, really just waiting for more information and more confluence around the levels I like. If we look at Ethereum, we can see that it's pretty much just doing the same thing. It doesn't look quite as good though. I mean, just from like an eyeball chart perspective, it does look a bit weak, and you can see that it is definitely weak versus Bitcoin. Another lower high here, at least on the daily. This is the ETH BTC chart, and to me, this just looks like it has all year, which is pretty pathetically weak. And I hope that changes, because I am a big fan of Ethereum. I think it'd be great to see an Ethereum pump versus Bitcoin, but it just does not look like that is going to happen in the short term. Maybe we'll get a retest of this local low here around 0.04 and start to form a base or something, but who knows? I mean, if you had been betting on that happening all year, it would have, you'd be waiting a long time. This is actually like a 2-year downtrend. If we look at Solana, it actually looks better than Bitcoin and ETH if you use, let's say, the 200-day moving average as a benchmark. It's still above it. It's been above it, and it's just kind of chilling, just not really doing a whole lot, but it has reclaimed that moving average. Now, keep in mind, volumes are really low. So this is kind of, maybe not the safest low here, or there might not be as much support there as you think. It is holding, but I mean, there's like no volume there, so it's kind of hard to gauge how really strong that support will be if you do get some big sellers step in. At this point, like I said, it's just chop season, and most people that do this well will tell you that the conditions are just not really here right now. You still have some supply overhangs with the U.S. government. They sent $500 million of Bitcoin. This was sometime last week, and of course the market dipped whenever that news came out. But the bigger picture there is that we know that they have more Bitcoin. They have like $9 billion left or something like that worth of Bitcoin in US dollars. So they could, if they wanted to, they could just keep selling, and the market's not going to like that the government is dumping quite a bit of Bitcoin on them. Now, if they do that over a longer period of time, slower, obviously the price impact is much lesser. But again, it's more about the uncertainty of what are they going to do with this. Nobody really knows. And then obviously the election, right? The election is, sort of the elephant in the room right now. I don't think it's going to be that big of a deal for Bitcoin, regardless of who wins, but it certainly will be a big deal for crypto and altcoins, as whatever president wins there has a dramatic impact on, I would say, the altcoin market, where most of the stuff at this point there's some regulatory uncertainty on it. But it's something like Bitcoin that has regulatory certainty for the most part. I don't think it really matters who becomes president. I think people are going to want a monetary inflation hedge as the United States government continues to print money to pay for its existing liabilities, its existing debt. And the only way that really happens with a debt to GDP at 120%, interest payments on the debt at 1.1 trillion, it's kind of obvious that you're going to have monetary inflation. And the best monetary inflation hedges, in my opinion, is gold and Bitcoin. And if we look at gold, we can see that gold has actually done quite well over the last week. Specifically, I think on Friday it had a breakout. This looks great. This is a very strong chart. Sort of like Bitcoin, where it got there, earlier in the year and it chopped around for a few months. But this has moved to the upside before Bitcoin. I think Bitcoin will follow. If you look at gold and Bitcoin, they are coupled on the higher time frame, and it makes sense because they are monetary inflation hedges. There is a finite supply of gold. It is different in the sense that it has about a 2% inflation rate, but it has similar mechanics. Obviously different supply. Bitcoin is more scarce, but I believe they will follow each other, and it's just a matter of time before Bitcoin catches up. And I think both of these do quite well post-election, when it's clear that it doesn't matter who the president is, we're just going to have more money printed. I mean, there's just no way around it at this point. So it's very bullish on Bitcoin. It's bullish to see that gold has already started to break out to the upside, making a new all-time high. And it's just a matter of time, I think, for Bitcoin. But that's all I really want to cover today. I don't want to spend too much time on, talking about, really a market that's not really doing a whole lot. And until next time, happy hunting, friends.
Hey, thanks for watching. Be sure to like and subscribe to our channel if you'd like more updates like this, and let us know in the comments, what do you think about today's video and Defiancy update and insight? Also, make sure that you join our Discord, our free community chat, where we discuss things like this, what's going on in real time. Typically, our Discord community is the first to know what's happening, and we would love to see you there. Check the link in the description. And until then, we'll see you in the next Defiancy Insight video. Bye for now.